Well, good afternoon, Maverick traders. It's market roundup time. Joe with you here on a Monday. It's the 29th of September as we finish off this first fall month. If you can believe it, it's been pretty quick. You guys know how this works. I'm going to take a look at the meaningful news of the day. Let's break down these markets technically, and I've got some trades to look at, so we'll share them.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Moving into the market analysis, it seems just kind of like a follow-through that we had from last week. Pretty good reversal signal on Thursday, fall through on Friday. Let's get into the daily news. So just kind of a confirmation of a bull pullback. We talked about this last week and over the weekend. But we got a little bit of a follow-through from today, but we just struggled to gain much after that. Kind of a gap up and another doji. But we're about halfway through a level of a pivot point to a new high. Pending home sales came out much higher than expected, 4.0% versus 0.2%. Folks, I've seen a few numbers economically that have come out way off. We'll talk about that in a second. However, it doesn't seem to make a difference. The markets seem to just kind of stay at this kind of glass half full situation. So how do we finish overall? So the Dow and the S&P and the Q is pretty much flat. Now remember, we did gap up. It's not like we came all the way down, but we did close comfortably off of the highs and off lows. We pretty much finished kind of where we opened. So the Dow flat, Q's about just shy of 0.5%, S&P just 0.25%, Russell flat. We did see a substantial drop in oil and a little bit of a bounce in gold. So there is some push-pull going on. We know that the markets will usually tend to act like this when it comes to levels of expected tops and bottoms. We were talking a lot about what the Fed can do next, expectations and interest rates, but some of these economic numbers are pretty far off, but they are pretty tumultuous to say the least. So let's take a look at the advanced decline line. 52% lower, 45% higher. Once again, not like it was a bearish day, but we did see retracement off of highs after this gap. Above below the 50-day moving average, pretty much 50-50. Let's get into the chart itself, and it becomes a situation of where do we go from? Where do we go next? We discussed this reversal signal. I thought it was a very strong one, a pullback. The volume really didn't participate. Volume is a big part of what I like to believe is kind of a confirmation of the sentiment's conviction and direction. We're not really seeing much. Friday's move was bullish, maybe an oversold bounce, whatever you want to call it, but a nice confirmation of a bull pullback to a higher level, or I mean from a support level, which you can see we set on Thursday. So where we're at right now, Mondays are very difficult for me to trade. My weaker trading days, folks, for me personally, are going to be Mondays and Fridays. We're right in the middle of, okay, well, here's the top and here's the bottom. Where do we go? I don't know. We just have to kind of follow along with what sentiment's going to do with what news is out there. I'm just going to kind of sit where my outlook was from the end of last week, which is still that glass half full. I've got a +1, +2, maybe +1 for the week, +3 for overall, but not much is going to change from that. Let's just jump over to the Qs real quick. The same idea. It's got that same gap. Okay, we got some of the numbers we expected. It's a little bit stronger. You guys can see that we didn't get too much of a retest of a support level like we did on the SPY, but volume did drop. Not a big issue there. We're still within this range. If we take this from the high to the bottom, it's a little bit higher than expected, but it's a pretty good gap. I mean, it gapped up. It didn't really fall apart. It didn't really shoot higher. It's just kind of, okay, we gapped up. Now what do? We're halfway through the retracement point from the corrective action and the previous high. So it's still bullish. We have to take into consideration the overall pattern and really just kind of stay there. So let's get into our heat map. NVIDIA participated, Amazon, Tesla. In fact, I got a couple of bulls here and one bear and a sideways, and it's basically just what's been in the news, what's been pushing higher, what's confirmed. I'm not seeing a whole lot of emerging things. I'm seeing a lot more of this had news that's going higher. Take a look at energy down here if you want a quick glance. As you can see, there's some reluctancy in some of these larger ones. Is this just kind of a corrective move after a pretty good bounce that we've seen in the energy sector? Well, it's very difficult to tell. Kind of more of the same. I'm seeing a little push and pull going on, but not enough to really change my outlook, really change my portfolio exposure. Once again, folks, it is a Monday coming off of a pretty strong close on Friday. So I'm going to have to see where these markets kind of settle. So it's pretty easy for me to just kind of sit back and say, look, I'm not going to change much. Keep it at a +1. I do like how it did it did confirm that pullback. What we saw here on Friday, talked about a nice little reversal signal that we've seen in the past. Nice confirmation there on Friday. Still a nice word uptrending 20-day, 50-day. Today's a little bit, okay, what do we do from here? We could go sideways. I would not be surprised for a little bit of a push and pull for a little bit. Don't be too freaked out by any sort of volatile moves. A huge surge to the upside that fails or a big push to the downside that actually has a massive tail. It's just kind of this way to the markets to actually test the resolve of traders at this point. But overall, folks, we are still definitely glass half full when it comes to the overall trend and the sentiment outlook. So let's take a look at a couple of trades. Not a big fan of hunting for stocks on Mondays or Fridays. However, these did pop up. Things were on my watch list. I got Foxa, O'Reilly, Tesla Hood, RKT, GLD. Things, hey, tell me something I don't know, folks. Some of these things continue to move higher, and they moved higher aggressively. On the sideways stuff, there is some sideways trends out there. If you guys want to reference some of the midweek updates that I've done over the last week or so, or some of the past end of days, you'll get a good sample size of there. But they are pushing some of the higher air levels or lower levels of those sideways trends. It becomes a lot difficult to play sideways when you're up against it, right? So I left them off for today. Maybe we'll get some more here in the next few days. CAVA, it's a restaurant company we looked at a few weeks ago on the midweek, and it just seems to rolling over again. So let's just jump straight into our first chart. I just wanted to go with Hood, and it seems to be things that are news-driven. Things that are talked about, big surge, a decent sized volume, but I just like the pattern here. Closed pretty much at its highs, immediately off of its lows to surge higher. These usually have a lot of momentum. Doesn't mean that it can't turn around and pull back. However, it might be something for a little bit more longer term, more of a diagonalized sideways to up play, if that's what you're looking for. Going over to the bear side, CAVA. This is a restaurant company. We talked about this a while ago. It did have its gap. It decided to retest this gap. We were talking about a breakdown. It was reluctant to do so. It finally did, but I did like this retest back up with some of these higher shadows showing that it would break again. And difficult to catch this, right? I mean, it would have been nice to catch it this morning, but it does look like it's stair-stepping down. Now, it might not be something you want to get into today, but these are the kind of the stocks I'm looking at, the ones that continue to have these big moves up, that have been strong, that show some strength, and stocks that are out of favor that continue to have these big falls down. Today is not the day to catch these moves, but it's a good confirmation of, geez, these things could continue to show their trend in the future. Once again, one of my weaknesses is trading early in the week and towards the end of the week. So I like to just show things that might raise an eyebrow. So confirmation of a bull pullback pivot that was set on Thursday. We talked a lot about this. I know that I did. Confirmation was on that Friday. Get a good bounce up to the upside here on Monday, but it didn't really go anywhere. No real follow through. So I didn't see a big move to the upside or turn around with correction where it just kind of failed. It's just kind of, okay, where do we go now? Leads me to believe that, hey, I should pump the brakes here. I got to be a +1, -1. I don't want to change my overall longer term outlook, or I should say the positions that I have. We are approaching previous resistance levels, so keep an eye on the volume. Not a lot of volume participating in these moves over the last couple of days. But if we do see something go up and actually test those levels to the upside with an increase, or if we test those bottoms, the downside here on the overall markets, I'm talking sectors as well, I'd like to see some conviction, some follow through, some volume, some validity when it comes to the surge to the upside or downside. That will give me a little bit more of an idea. Okay, maybe I should lighten up and maybe change direction or continue to what I have going on and maybe add more. Economic reports, folks, I glossed over them. Big jump in pending home sales. Not a big jump, way off. Expected of 0.2%. It came in at 4.0%. You guys could do the difference on that. I'm not sure if it's just a push-pull reaction. I mean, we did come off of new home sales on Wednesday, which was expected 650. It came in at 800K. That is a 20% number change, 20% off. It's a 3-year high. Okay, last-ditch effort, great. Final GDP, this was a revised GDP, which is supposed to be 3.3 in line. It was a 3.8%. That's 15% off. These numbers aren't missing by a little bit. They're missing by a lot. So I'm trying to just pump the brakes, throw them out. It's very difficult to kind of use them to help when it comes to, hey, the economy is growing or slowing. I just got to go back to the charts. So I've kind of set aside my outlook on these numbers until they start to make a little bit more sense, and I'm just kind of following where the markets go. So kind of set that aside. Earnings season, we're out of the earnings season. We are seeing specific events, or I should say announcements when it comes to stocks, which is kind of some of the things I put on the list here even today. We're starting to see a little bit of reaction to that. It's very difficult to anticipate these or play these. They're going to be AI-driven contracts that are signed, negotiation, deals, announcements, things of that nature. So there's a whole lot of that going on, but it becomes super difficult to use any of these numbers to kind of give us a feel of where sentiment could go. We just kind of really have to calm all the noise and just kind of follow price action because that's the only thing that I can really see consistent as of late. All right, folks, that's all I got for Monday. We'll talk to you next time. Thanks for joining me. Bye, everybody.